I think the first thing to understand is that our vulnerable middle class is vulnerable across the world. So in South Africa, there was a UN report that said that 34% of households are likely to fall out of the middle class into financial vulnerability. That's in South Africa alone. But globally, 1 in 6 consumers or 1 in 6 workers is already sort of adopting these buy now, pay later services or cashing in with payday lenders. So in other words, it shows that people that might seem to have it all together simply don't. Other studies have shown that in South Africa, 74% of households run out of money before the end of the month. So this is for many reasons. People are trying to catch up with their neighbors. People just simply don't have enough money to even cover their basic living expenses. But I think it's also quite interesting to note that even high earners in South Africa, that's people earning over 750,000 Rand a year, are also not making it to the end of the month. So we do have a bit of a consumption problem. And what we are seeing now is that there are sort of predatory fintech companies that are preying on this precariate class. And the precariate class is simply the precarious middle class. It's not defined by how rich you are, but rather how precarious your financial situation is.
You refer to the survey around South Africa, and 74% of South Africans running out of money by the end of the month. But perhaps even more alarming is that 50% of South Africans run out of money mid-month. So
yes,
again, you know, talking to this theme and what opportunity exists to help people access their salaries, which usually come in that monthly lump sum at the end of the month.
Yes, so there's basically 2 types of businesses that are emerging to sort of take advantage of the precariat class. The one would be buy now, pay later services, and the other is payday lenders. So payday lenders kind of give you an advance on your salary, which is fine if you do it once or twice, but it becomes a habit that obviously rolls into debt. It affects your credit scores and can get you into a debt trap.
Is it highly expensive? I mean, is this almost similar to microloan, loan shark environment?
Yes, so they are microloans. They are getting you into debt. They're debt training wheels. They are typically sold as being sort of more your friend and less your enemy than a loan shark would be. Many of them promise very, very low rates or even no interest for their services. But if you miss a payment, you are going to be listed with credit bureaus, which can have a huge impact on your personal financial situation. And you do still owe the money. So if these things start to compound, you can get people into a lot of trouble. They're typically loaning quite small amounts, so it seems like it's low risk, but it does roll up when people are relying on this for their day-to-day expenses. Now, the buy now, pay later thing is the sort of second option there. And this is really facilitating conspicuous consumption. So it's encouraging people particularly to make online purchases. These services are positioning themselves as an easy alternative on your checkout cart when you are buying things online. And they allow you typically to split that purchase into 4 easy interest-free payments, as they call them. But there is a catch.
Yes, what is the catch? Because it sounds relatively attractive. 4 interest-free, easy payments.
Yeah, the catch, of course, is that if you do miss those payments, they charge you fees. And these fees can be generally around about sort of 65 Rand if you took looking at the more popular services that are gaining traction here in South Africa. And then if you miss too many of those payments, they're typically weekly payments, they will once again hand you over to debt collectors who can, of course, add as much interest as they like to claw back that money from you. And once again, it will destroy your credit rating and your credit record, which just makes access to cash in the future become that much more expensive. But it's very big business. Analysts are saying, like BNP nationally, internationally, saying that the buy now, pay later market is on track to be a $1 billion market cap by 2025, which is huge. And we're already talking that $1 billion. We're not talking about the value of the underlying transactions. Rather, we're talking about the amount of money these services are making in fees from both merchants and from consumers. So big business, very, very attractive, but it is quite a predatory business model because we're getting people into debt cycles that they're simply not going to be able to keep up with. It's a treadmill. So when you start getting addicted to these services, you're in the system. If you're continually living beyond your means, splitting those payments into 4 easy payments, you can get yourself into quite a lot of trouble quite quickly. And that's why regulators across the world are looking at these companies. One of the most successful ones. There's a European company by the name of Klarna, and regulators are looking into them to make sure they are doing correct credit checks on their customers and that they are not taking advantage of people. There have been a lot of scandals also in the UK from payday lenders in a very similar sort of business model that have actually gone bankrupt or left a lot of people in the lurch, also just by not being particularly prudent or sensible when it comes to who they're lending to and what sorts of amounts.
So key message here, look at the terms and conditions and don't sign up across multiple platforms, because you're going to find that very quickly eating into your income, even if you try to divvy it up into weekly payments. Bronwyn Williams, thank you very much, partner at Flux Trends. Brilliant. Thanks a lot.
Not $1 trillion, $1 billion.
Don't worry, I'll edit it out. I'll edit it out. Got it.
Oh, good. Thanks very much.
Ciao, ciao, man. Bye.
Bye.